Let's also speak with the management of JSW Steel. They've delivered an inline set of numbers. Seshagiri Rao is joining us this morning. Mr. Rao, good to have you with us as always. It's been a tough quarter, led primarily, of course, by the fall that we've seen in steel prices. So let's first talk about average realizations and what they were looking like.
The average realizations year on year have come down by 8%. The fall in prices in steel is in line with what is happening globally. If I look at the first half of the calendar year in USA, the steel prices fell by 30%. Similarly, in China and Europe, it fell by almost close to 5 to 10%. So the fall in Indian prices are also exactly in line with what is happening globally. So realizations were lower by 8% year on year, and quarter on quarter is more or less we could maintain the same NSR because of the change in the product mix.
You've noted that India has seen weak activity levels with the auto slowdown, construction, infrastructure slowdown as well. Do you think Indian steel prices will stay low for some time?
Indian steel prices, in my view, already seen the bottom. That is exactly what is happening globally also. Because iron ore prices in this year went up. Globally, in the first half of the year, steel prices went up by 70%, and for the quarter it went up by 38%, whereas steel prices are falling. So this situation I don't expect to continue. That's why we are seeing a lot of supply side adjustments where Europe has announced, some companies announced production cuts, same thing in USA. Even in China we have seen some announcement of production cuts. So once supply side adjustment start happening, even though demand is slightly weak, we expect steel prices, if not pick up, they will not fall further.
Okay. China, Mr. Seshagiri, has ruled out blanket winter curbs this time around. Do you think this could be a headwind to steel prices?
What is interesting as regards to China, even though production went up close to 10% in this year, their exports are not going up. Their exports remained at the same level as that of last year or slightly lower. So that clearly indicates that the domestic demand is quite strong within China. They are able to absorb even the incremental production that is happening over last year. Highest ever production China has done in the month of May 2019, which is 89 million ton of production. Even then exports have not increased. So the stimulus which the Chinese government has announced for infrastructure projects, that is keeping the demand remain within China. So that is, I think, is a comforting factor for the global steel industry.
Right. Do you think the coming quarter should see steel demand in India then pick up and hence your own volumes pick up as well?
We have given the guidance of 16.95 million ton production in this year, so we are exactly on track. As regards to volume of sales, we were supposed to do 4 million in the quarter one, whereas we have done 3.75 million ton. So this 250,000 ton shortfall, we are confident that we will be able to make it up in the following quarters. This confidence is stemming from the fact that last year also the entire steel demand is driven by government expenditure, which got slowed down in the first half of this year. So now the stable government with new budget got approved. There is a lot of money which will come into the infrastructure sector that should bring back the steel demand. And at the same time, the credit availability to the industry will also should get revived. So both of these factors which caused the weakness in steel demand should get corrected, and the demand should pick up in the second half of this financial year.
All right. Can you tell us how iron ore prices trended in the quarter, and what is the percentage that is being catered to via your captive mines?
Iron ore prices in India also went up by almost 10%, whereas as I mentioned to you, global iron ore prices also went up. In the we have a total 6 mines secured in the category C mines auction. Out of that, 4 mines became operational. So our plan in this year is to get around 4.5 to 5 million ton from our captive sources to meet our requirement in Karnataka. So that will reduce our costs, and it will enable us to source iron ore from captive. We are also participating in more and more auctions which have happened in Karnataka very recently. In that we could secure 3 mines. So they also will become operational in the next year. With that, our captive sources of iron ore will go up close to 35% at the current allowed capacity.
So tell us, how will JSW Steel manage to stay insulated from all the allegations of fraud at the newly acquired Bhushan Power?
We are not acquired. We are a successful bidder. Our resolution plan has been submitted to NCLT for approval. In the meantime, whatever news items that have come in about the developments in Bhushan Power and Steel, we approached the NCLT for a specific immunity from any other issues that may come up because of these developments. So that we are eagerly waiting for. Once the judgment comes in the way we are expecting, then we will go ahead.
Okay, you've also resolved to turn around Mone Ispat in about 2 years. What are some of the steps being taken? What's the plan there?
Yeah, 2 years we'll be able to do. The 2 years is next year, September. So by that time we'll be able to operate this unit on an integrated basis and also complete the project which is not fully complete. So with that we will be able to operate from September 2020 at its full capacity.
Right. Mr. Seshagiri, the board has also approved about $1 billion in fundraising. Will that be used towards the ongoing brownfield expansion?
Yes, we have a large capex program. So if at all we decide to go ahead with the raising of funding, either in India or overseas, so those funds will be used for our capex program.
Now, steelmakers are against expanding the ambit of FTA countries. What are your concerns?
India has signed with almost 12 countries earlier FTAs, but the experience in the last 8 to 9 years is that these FTA countries have got many advantages relative to India. We are not able to increase our exports to those countries, but at the same time the trade deficit has widened with those countries. We have not got any benefit at all. Particularly steel industry, if I look at in the Q1 which just completed, the FTA countries have dumped steel into India at 0% duty, which constitutes 66% of the total imports. So if we do the similar thing with China, which is in fact becoming surplus steel producer, if they start putting steel at 0% duty into India, it can create a huge damage to the Indian steel industry. That's why we are requesting not to sign RCP, RCEP. Even if it is signed, please exclude the steel from there. Otherwise, we may have to face similar problems as we are facing today with FTA countries, including Japan and Korea.
All right, Mr. Rao, thank you for joining in and giving us a view on your all-round earnings as well as the outlook going forward. So guiding for 16.5 million ton steel production in FY20, and steel demand in India is likely to pick up in the second half.